Good morning. Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE. It is May 5th, and it is Brent crude oil trading below $60 a barrel, down about 3% in trade in Asia today, ultimately in the aftermath of the OPEC Plus decision on Saturday to to accelerate the pace, or to continue with the accelerated pace of oil supply increases through the second quarter to the end of June. Let's welcome back to the table Omar Najia, Head of Trading and Derivatives at BB Energy. Omar, your thoughts at this continued commitment by OPEC Plus to accelerate oil supply increases into what is a weakening demand, a global economic story?
So maybe a month ago plus, we said, lower, a lot lower. There was a kind of, deal brewing between the Americans and the Saudis, and they wanted to push oil prices down because it was an input to the global economy and they had their agenda, blah, blah, blah. So, surprise, surprise, who'd have thunk it? They come out and say, we're going to push all this oil out to the market just before Trump comes visiting. So again, we think basically oil prices are heading lower. We think that whatever OPEC does or doesn't do or says or doesn't say, the trajectory is the same, lower. And that's it.
Sorry, were you signaling there that the increase ahead of Donald Trump, President Trump's visit next week, that this is a sort of a strategic sort of alignment guided by relationships with the US?
Yeah, but this has been going on for decades. It's not something new. So basically,
will it reverse when he goes back home to Washington?
No, it's basic. The US needs oil prices lower because basically the US is very sensitive to what? Gasoline prices at the pump. So Trump can get up and say, look at prices at the pump, they're a lot lower. Look at egg prices, they're lower, that kind of stuff, right? So inflation is coming to the US and coming to the US in a big way. He needs some kind of win. The win is going to be energy. And the win is going to be, and plus, if you want to make America great again, and do it like miraculously in a year and magic these factories and all the rest of it to produce stuff, the input to all of that is oil. So you need cheap oil. So I think that they are going to keep, on a geopolitical front, keep pushing this oil price lower. And it's not going to be a buy until it gets. So people have said to me, yeah, but look at oil against gold. Look at oil against the US dollar. Look at the S&P against. Oil looks very, very cheap, but the news is it's going lower still. It's still a no-brainer. When WTI gets to maybe about 40, I think that would be a good time to buy. But for now, I think lower on oil.
Michelle Weiss-Bachmann, independent energy and commodities analyst. Michelle, your thoughts on the same news of the weekend? Obviously, OPEC Plus continuing with this accelerated oil supply increase, despite what seems to be a weakening demand architecture, as we're told most recently by the IMF, World Bank the week before, that global economic growth is declining.
Morning, Sean. Well, one way of looking at it is this could be a bet by Saudi Arabia that Trump is able to deliver on his maximum pressure zero Iranian imports into China, and that he will take on China. Because if you look at Chinese customs data, you'll see that Russia is the biggest importer of oil at 20%. Saudi Arabia is number 2. Malaysia is number 3. Malaysia, of course, being the, a proxy for Iranian oil coming in. So perhaps he believes that Saudi Arabia believes that they will be able to make market share at the expense of Russia and Iran. I mean, personally, I don't think that Trump will be able to deliver his maximum pressure promises for a whole host of reasons. But that could be one way of looking at it, that this is a part of a broader geopolitical strategy.
Let's welcome Clyde Russell, of course, the op-ed writer on commodities based out of Australia, had a reaction article yesterday, Clyde. OPEC's healthy crude oil market looks like catching a cold. Not a flu, not pneumonia, just a tepid little cold at $59 a barrel. Why not pneumonia? Why only a cold?
Well, sometimes you got to hedge your bets a little bit in my game.
You don't write the headlines, I suppose. That's your answer.
But no, that headline I did write. That was one of mine. I think it's too early to say you're going to get a full-blown bout of pneumonia for crude oil. I agree that all the indicators are pointing downwards.
20% in a month. I'm not sure what you call that these days, but certainly as a percentage would seem like something weightier.
Oh yeah, it's certainly been, you know, quite a rapid retreat in recent weeks. I think you sort of got a whole bunch of conflicting realities, and when you actually come to that sort of thing, I always tend to go with the simplest thing. Is I think OPEC sees that the demand hit is coming, irrespective of what they put on their statement and the website. They see that it's likely going to be quite a major hit to demand. Just think of all these container ships not sailing between China and the US. Thinking of all the trucks not moving goods to and from ports in both countries. Think of the air freight not happening. Think of the pullback in consumer spending that will affect both road, you know, gasoline usage and air travel. All those kind of things are coming. They're not actually in the market yet. They're still coming. They're starting to come through, but they're not actually happening. So I think OPEC says we can't stand in front of we're not going to try catch the falling knife. We're just going to let the cards go. And at that point, you know, oil doesn't really have a floor. It's, you know, you can just test how low it can go. So, you know, as Omar says, a number in the 40s is quite conceivable from here. On the other hand, you know, you got to actually have a quick look at, you know, Trump's motivations. Yes, he wants low oil prices, but also the U.S. energy industry is one of his biggest supporters. It's a group of people, a group of companies that he was very keen to please. This is throwing them under the bus. You know, oil, if WTI goes into the 40s, US oil producers are completely and utterly screwed. And, you know, so it's a kind of contradictory thing.
Is it important to, I mean, understand what the North Star here is, and certainly in order to then have some sense of when OPEC Plus will stop? I mean, you have included in your article today the note, the data point, which is obviously important, that nearly 50% of the 2.2 million barrel a day cuts will be reversed come June. That leaves the other 50%. Given the logic we're seeing at the moment, is there any reason to expect that they just won't proceed with the whole thing, that by the end of the third quarter, all 2.2 million will be back, regardless of the economic or the market scenario?
Well, I think that's a reasonable assumption, that they'll just keep adding barrels back into the market on the basis that, you know, OPEC Plus is some of the lowest cost producers, rather than get the money than somebody else, if the prices are going to be falling anyway. So there is a certain logic to that. That's what's happened in the past when we've had sort of a demand-led price falls, if you put it that way. That demand is weak and prices falling because of that. OPEC can't really stand in the way of that. They just let it happen. And I think that's probably where we're going to end up now. I would not be surprised if they just keep adding barrels back in, eventually to the point where output restrictions, cuts, quotas all really become meaningless, and it's just kind of like a free-for-all. Produce what you can, sell what you can, and, you know, last man standing wins.
Omar, as traders, do you care why this is happening? Is it important to understand why OPEC Plus is doing this?
Well, no, I mean, but the why, people have they like to conflate the news headline with the move in oil. The move in oil was always going to happen. The fall in the dollar was always going to happen. These things, you know, they don't just happen. People don't just wake up one day and say, oh, you know, Saudi now is selling, so you've got to basically sell and start selling. This is stuff that's been going on for a while. So, you know, oil is a very kind of geopolitical asset. So
it does seem to be
the,
heavily correlated on the front month, at least, the decline with the escalation of the global trade war, the tariffs, as well as the OPEC Plus decision. Both of those things did come together. So in some ways, it's
that's
hard to separate them. But
can I just say that's actually incorrect. So if you look at when he said delay tariffs by 90 days,
yeah,
the S&P has been going up straight, right? When he said that delay the tariff after he said delay the tariffs, oil initially went up, but is now falling very hard,
yeah,
and
yeah.
was falling before
Because the
Monday.
China one never changed. All the others did get a pause, but China didn't. And that
Exactly.
seems to be the biggest sort of weight for the oil markets.
Yeah,
No?
totally agree. Totally
Yeah.
agree. Absolutely, 100%. 100%.
Do you see anything that indicates, looking at, you mentioned 40, I mean, on WTI, is there not a sort of a technical signal before then that
Yeah, sure.
that market
you
would
look
need
at-
to break through?
If you look at oil after it set a high after the war in Ukraine, it's forming a wedge. It's a kind of sideways sitting triangle. Looks like a wedge pointed like a door stopper looking towards the right. So the target for that is $45. But markets always like to overshoot because everybody says, $45, it's not going to go below. And then it gets to $45, everybody panics, goes below, then comes back up again. So technically, the risk for this market is a drop to $45, and with a little bit of overshoot, 40. But if things get worse with the China trade war, the rest of it, then like what Clyde was saying, why not lower? Why not $28 or $30 a barrel? So I mean, the thing to understand is the trend on oil is lower, is not higher. The trend of the US dollar, no matter what happens in terms of 1 week, people got excited, it bounced a little bit. The trend is lower. The trend is lower on US assets. People are divesting of US assets and buying other stuff. So sell USD, buy GBP, sell USD, buy euro, sell oil. And the other thing is, even though I think that the S&P will go higher and set new highs, the other thing to consider is the price to earning ratio. That kind of growth that you've had in US market, that's finished forever. I mean, it's never coming back. These multiples of 30 and 40 and whatever it is, that's
Never mind, 100 to 300 they were with NVIDIA and Tesla.
That's gone. And the other thing is with technology, people say, the US has done, so much, has lived for the last 20 years on tech, all these tech companies, Meta, et cetera. But now AI can code just as well as anybody else. So tech is leaving the US. So you're having a flattening of the playing field. So
that's another very large idea. Michelle, meanwhile, back on the waters, that lovely photograph behind you, even though it's an LNG tanker and not an oil tanker, but nonetheless, are these prices making the Russian oil cap irrelevant, the dark fleet disappearing, and now everything is fuzzy and lovely and all ships are legal?
Absolutely not. In fact, the prevalence of illicit and deceptive shipping practices has never been more obvious. We have more than half of the ships that ship sanctioned oil, including Iranian oil, are now under some form of US sanctioned. Over April alone, more than 60 tankers were sanctioned by Trump. And we're clearly seeing that daily these ships are delivering to China, and even they're actually off Fujairah, where they're undertaking deceptive.
Never heard of that place, don't I?
Yes. But I mean, so no, and what we do see is that with Urals pricing below the cap, we're seeing about 50% last month of shipments were undertaken on private Greek-owned ships. So what has allowed, it's allowed those risk-taking Western ship owners to re-enter the market. So that's one aspect of lower oil prices that's been of benefit to a certain sector of the market. But no, we're seeing the waters are far more dangerous, and we're seeing a lack of appetite from the buyers and sellers of that oil to really tackle what, I keep saying, accidents waiting to happen.
Clyde, taking the argument that OPEC have put forward in their statement over the weekend that there is a gap of opportunity here because of low global inventory levels, oil inventory levels. And so by adding these extra supply, if they added all of it back by the end of the third quarter, it would amount to about an additional 200 million barrels of oil supply into the global market. Is there an argument there? Does that seem right? I mean, the Chinese love to buy cheap oil. Are they stocking up their inventories? Do indeed have any more room to store oil? What do you take of this reason that OPEC Plus is giving, that there is space because of the low inventories?
Well, if you look at visible inventories, and we'll talk OPEC's own numbers for the OECD, so the developed world, they're slightly below the 5-year average, about 70 million barrels using OPEC's own data. That's about 2.5% below the 5-year average. Is that a worry? Is 2.5% below the 5-year average enough to really start flooding the oil market with extra oil? I don't think so. I think 2.5% when you're coming off a period of relatively high oil prices. Remember, oil was in kind of an uptrend to until January. So a lot of the oil that is being delivered now is actually, still had been purchased at fairly high prices. So, the fact that inventories have come off a little bit in that period of time, I wouldn't say, that's not a reason to add more supply back into the market. If you look at the less visible inventories, and we're mainly talking China here, I do a calculation every month to what I call their surplus crude, which is basically you take their imports, their domestic production, and you subtract off their refinery throughput. I know it is not a perfect number, but it is an indication. And on that basis, it was about 1.74 million barrels a day in March. So that's how much extra crude they had. So yes, they actually had drawn slightly on inventories in January and February, and then massively bought in March. Given that the imports in April appear to be quite high as well for China, I'm guessing that there will be quite a lot of surplus crude there as well. So I would argue that they're already doing it. March was really sucking up Iranian barrels. April was more going back to sucking up Russian barrels after they'd worked out how to get around the ship sanctions that came in at the end of the Biden administration. So yes, I think
China is still healthy then, more or less. I mean, even though this is, if there's one winner at the moment, it has to be China, the world's biggest oil importer.
Yes, I mean, they're getting exactly what they want. Again, they're getting cheap oil, which is good for them. It will help them, weather the tariff storm. Certainly the lower energy costs are good for everybody in that sense. And they are able to build up even more inventories in case prices do start to rise at some point in the future. As to your question as to how much storage space they've got left, that's again another movable feast. No one really knows, but certainly they've got enough to keep buying an extra 1 million barrels a day for quite some period of time. And they don't have to store it onshore or in China. They can store it in a variety of other places too. So I think you sort of see that if they believe oil is cheap and getting cheaper, they might well be happy to buy. But what
you would think also the U.S. Strategic Petroleum Reserve, they should be buying at these levels, right? I mean, they under Biden took out a lot of their stock, and $50 something on WTI would seem nearly against the law not to be buying at these prices if you are thinking just strictly from the Supreme Petroleum Reserve point of view.
Yes, but on the other hand, Trump would want them to buy U.S. oil, and that's not what they need to put in the SPR. So that becomes a political tricky matter for them. But I think I think you'll find that China will buy more. What we're not seeing in China is rising demand, actual consumption. So all the extra oil is really going into storage. And I think, if anything, you're going to see falling consumption in coming months, notwithstanding that you'd normally get a bump in fuel demand in, the northern summer period. But I think you're likely to see it's going to be a very weak summer in Asia. And, again, that's just going to put more pressure downward pressure on oil prices.
Let's go to the survey question, which tackles this point. OPEC Plus will continue with accelerated oil supply increases through Q3 until all 2.2 million barrel a day cuts are reversed. Agree or disagree that OPEC will continue with this accelerated plan? There doesn't seem to be any market reason why they're doing it, so there seems to be other reasons. And so in the sense that there's other reasons, disciplining within the group, or global market share, or whatever the reasons you think they're doing it is their main one. But ultimately, they're not stopping in June is the point here. Agree or disagree with that thesis? And Omar, looking forward into the cycle of year, right? It is May, the start of what is infamously soon the Labor Day weekend in America, and everybody gets in their big cars and drives all the way across country to see Granny, burns lots of gasoline. Will we see a natural surge in consumption and price get some kind of boost from that?
I have a different favorite saying. It's basically sell in May and go away.
Just because you go on holidays for 5 months with all your oil trading buddies, this lovely job of go away in May and come back in October. No.
Yeah, no, but on a serious note, I think basically it's a very delicate. You've seen Trump for the first time in maybe history controls so much. He's like an old-fashioned king who can basically sign things into existence and basically say one day 200% tariffs on China, the next day, okay, 90, the next day we'll have tariffs on this company or not that company or whatever. So his sway is absolutely massive. So therefore, the uncertainty in the world on any level, in any market, in any company is huge. People don't know what's going to happen to the US dollar. People are confused about oil prices, what's going to happen to equities, what's going to happen to tariffs. You add all that together, and it's not something where you can basically see the future clearly or anticipate it to some extent, because everything can change in a day, sometimes 2 or 3 times a day. So what happens is that people who make decisions tend to say, I'm not going to make one. I'm just going to wait and see. So I don't expect to see growth. I don't expect to see investment. I don't expect to see any of that. I expect to see more uncertainty, more trade wars, and all the rest of it. And yes, sometimes you get good news, sometimes it won't be so good. But what I don't expect is a trend in terms of growth to the upside and kind of a joy feeling as we go into the end of the year. I don't expect that.
Michelle, you've been doing some amazing reporting on the traffic of sort of dark fleet vessels through the Baltics and the policing or lack thereof policing. Why is that something we need to, that's important? Remind us what is being done there, what's not happening, what needs to happen, and so forth. Ultimately, your reporting would indicate that there's a lot of ships moving that where their insurance would ultimately be not stand up in a court of law.
Yeah, absolutely. So one of the unintended consequences of sanctions is that ships have moved completely outside any regulatory oversight whatsoever. So they have gone to fraudulent registries. So we've got flags like Guyana, Eswatini, Curacao, for example. And that means that even if they had insurance, even if they had class, it's all invalidated. And in the case of the Baltic, we had one tanker, well, there's actually another tanker that was falsely claiming to fly the Djibouti flag. And that sailed through the Baltic Sea, through the Danish Straits, through the English Channel, completely unimpeded. So these tankers not only are sailing through, waters, Western waters, I've tracked them delivering cargoes to Chinese berths and terminals over this weekend. I've tracked them into the anchorages at Fujairah, and these ships, at the absolute minimum, port state control should be making sure that they are taken, out of the equation, simply because if there is an accident, the coastal states, the governments are going to have to pay. And I've never seen it on this scale before, and it really is a very new problem that everybody is going to have to deal with. And so far, there's been an unwillingness for anybody to be able to.
I mean, in the anybody list, who's top of that list? Who should be taking this on?
Well, in the case of China, port state control, if you have tankers delivering oil from Malaysia that are flagged in Guyana, which we know is a fraudulent registry, that ship should be detained. It should not sail until it's properly flagged. The example in Fujairah, for example, there are 8 ships at this very moment signaling they're in that anchorage that are falsely flagged. Port state control should be banning any ships from Guyana and Eswatini and any of those fraudulent registries, much in the same way as that they've banned ships and banned certain flags in the past. And these are, this is the low-hanging fruit of dealing with a very, very big problem for shipping and for oil.
And despite the lower price point and the sort of oil price cap for Russia, so this problem is not declining. It's not, I mean, we had got to sort of a high water mark, no pun intended, in terms of the dark fleet when prices were elevated in the 80s or whatever. Now you would have thought that that scale of activity would be declining.
No.
Is that a wrong assumption?
No, not at all, because what's happening is that sanctions are escalating. As I said, we had 60 plus tankers last month,
right,
plus tankers in May, and the result of that is, in order to continue trading, they're being booted out of the, let's say they're flagged in Panama. Panama has a policy to deflag those vessels, so they're looking for refuge, and they're finding refuge in fraudulent and false activities, and so the problem is growing. And of course, there's a willingness for countries, especially China, which is the main source of this oil, to sort of close their eyes and look the other way and let these ships come into the port.
Clyde, looking at this sort of bigger picture here of the last month, in which Brent crude oil has lost 20% of its value, and with the OPEC Plus decisions we've talked about, but the other big one is the China-US trade face-off. How is that looking from an Asian point of view? Is China weakening? Is China going to concede here? There's mood music last week was relatively positive that US and China were coming to some agreement. Where's your thoughts on that going and its ramifications for all of Asia?
Well, I think the Chinese think they're winning, is the simple way to put it. They think that Trump has overplayed his hand, that the US is actually far more dependent upon Chinese goods than they are on US goods or access to US capital. So I think the Chinese are feeling fairly comfortable. The other thing is, while this is
unmotivated to do a deal?
Are they motivated to do a deal? They're motivated to do what I would call a faux deal, a deal where they could give Trump a seeming victory, but in reality, nothing really changes. Much like what they did in 2018, where they agreed to buy a whole bunch of US energy products, oil, LNG, coal, agricultural stuff, and then didn't really do it at all. So, they're playing Trump, and Trump is being played, whether he likes it or not. My own feeling is that the Chinese are in this for the long haul. Other parts of their economy are not doing that badly. If you actually look at some things, they're doing quite well. Iron ore prices have not really fallen very much at all. They're off a little bit of their highs, but it's still around $100 a ton. That's a high price.
Australia's happy.
Australia's very happy on that. But if you use iron ore as a proxy for how the Chinese economy is traveling outside of its sort of export business, because iron ore is consumed internally, then that's showing that things actually aren't that bad. So I think the Chinese...
And they're hardly stockpiling that, right? They're hardly storing iron ore. They'll be consuming that.
No, in fact, the port stockpiles of iron ore have been trending lower the last few months. So, they're importing as much as they need and they're using it. Whether that continues or not remains to be seen. But for anyone who says the Chinese economy is on its knees and weak and whatever, no, that's just simply not the case. That's just MAGA propaganda.
And just a kind of an inside baseball that you could share with us. Why did Michelle Weiss Bachmann vote for this new government that was elected in Australia? No, both of you. Clyde, how should we interpret this somewhat surprisingly big win for the Labour Party in Australia? A majority, unlike the Canadians who didn't get a majority but did reverse a big decline in their outlook over a few months. Australia, your thoughts on the outcome of that election? What is its global message?
Well, I think there's two things. The global message is that running a Trump-style campaign, which the Conservative opposition did largely in Australia, there were differences, I will grant them that, but running a Trump-style campaign and using slogans like "Make Australia Great Again" really backfired on them. People saw the chaos of the United States. They don't want that, and they voted for stability. And the Labour Party here, which is very much a centre-left party, ran a very centrist, unfrightening campaign. Let's just keep things steady. We're starting to see improvements. Inflation's under control, And people said, yeah, we'll go with that. So I think that was the sort of main message, is people in Australia voted for stability, rather than in Canada, they perhaps voted for somebody to stand up to Trump rather than, bow down to him.
They're a bit closer.
Certainly, Australians really rejected that sort of extreme right-wing type of governance that we're seeing, and they wanted something stable.
Well, we're going to have to leave it there. A positive mood. 100% of the room thinks OPEC will continue with those cuts, or with those increases, rather, reversing those cuts through the third quarter. Always a bad question by Sean when you get 100% in one direction. Must do better. Okay, guys, thank you so much. The week begins. Brent below $60 a barrel. Will the week end with Brent below $60 a barrel? How big of a shift is this, or is it a temporary blip? Are we moving, as I'm exploring, from a 50-year era of maximize oil prices to one in which we maximize production from a low-cost producer's perspective, of course, which is what the neighborhood I'm in? Is this the shift we are in? That is, seems that at some date and time inevitably is what will happen, but is it now that time? That's the question for bigger brains than mine, but the one I'm asking nonetheless. Omar Najia in Dubai, as always. Monday morning isn't the same without your quarterback, Michelle Weiss Bachmann. Thank you so much. Nobody better on the high seas than you, and Clyde Russell keeping us all straight in Australia and down under. Thank you, guys. Have a great week. All the best. Bye-bye.
Thank you.
Thank you.
Thank you.